Hello, I'm Rhonda Porter, mortgage advisor from the greater Seattle area, and I'm here with your weekly mortgage rate update for the first week of February 2025. On Wednesday last week, the Fed announced that the Fed funds rate would remain unchanged. This was widely anticipated in the markets and had little impact on mortgage rates. The next Fed meeting is scheduled for March 19th, and it currently has odds of 86% to remain unchanged. Optimal Blue reports that as of last Friday, the 30-year fixed rate, which is the dark blue line on this graph, is still under 7% at about 6.843%. Now, of course, this is expired. You can't lock in rates from last Friday, but this does show us a trend that rates are slightly improved for the 30-year fixed rate. Please remember that this is an index from about 35% of the mortgage transactions, which is the lenders that use Optimal Blue for locking in their interest rates. And so we don't know how many points are being used or what somebody's credit scores are or what the loan to value is when we're factoring in how the person came to the rate. And again, this is just an average. So if you'd like a rate based on your personal scenario, please reach out to me. I'm happy to provide that to you. It's the first week of the month, which means that it's jobs week. And we have the ADP employment report being released on Wednesday, where it's anticipated to show 140,000 jobs were created in January. On Friday, we have the BLS jobs report, which tends to carry more weight, and we are expected to see about 170,000 jobs created in January on that report, and for the unemployment rate to remain at 4.1%. So any variances in these numbers may impact mortgage rates. And what we're looking for is signs of inflation, like to have the jobs market coming in hotter than expected. So stay tuned. We'll be watching that closely. Well, in global news that may impact mortgage rates, we have Trump's tariffs. So over the weekend, he imposed tariffs of 25% against Mexico and Canada, and an additional 10% against China. Mexico just moments ago has come to an agreement. This is around 11 a.m. as I'm putting this together with Trump and to delay this for about a month. So Trump is also threatening to go after the European Union. So tariffs are inflationary as they drive up the cost of goods, and mortgage rates will react negatively to inflation. So again, this is something to be watching when it comes to mortgage rates. And as I prepare this, mortgage-backed securities are up about 8 basis points. We can see how much last jobs report impacted mortgage rates by about 445 basis points, which is that big red candlestick. And then the PCE report, which came in after that later in the week, helped to improve mortgage rates and then some from what the jobs report did. So that's something the jobs report does carry a lot of weight with mortgage rates. That little red blip I have highlighted from last week shows you the Fed's impact with the funds rate as far as mortgage rates are concerned. So again, we'll be watching especially Friday's jobs report quite closely. In this week's In the Spotlight, I want to share with you loan level price adjustments. And one reason why it's important to start the pre-approval process early is that just a few points in your credit score can impact your interest rate or what you pay for your interest rate. So this chart is showing conforming price adjustments based on credit scores and loan to value, or the amount that you have of home equity that you have. So this is referred to as loan level price adjustments, or LLPAs. If you have 20% down in a credit score in the 700s, there are 5 different price buckets that will impact the cost of the rate. So at 20% down and a 780 or higher score, your rate has a 0.375% as far as points, additional points, than if you had 25% down. If your credit score is 760 to 799, then 0.625 points is factored into the pricing of the rate. If you have a down payment of less than 20%, the LLPA is actually reduced. And this is because there's private mortgage insurance with the loan, which protects the lender. So if you see that at 10% down, or the 85.01 to 90% category at 780 or higher, it's an eighth lower in fee, basically, at a quarter point than if you had 20% down. And it actually improves at a 5% down scenario. And there's also some programs for that are income-based with conforming where the LLPAs are removed or limited as well. So this is all intended to be risk-based pricing. And again, 1-digit difference in your credit score can make the difference in your cost for your interest rate. So I often help people create a plan to improve their credit. Sometimes it's before they buy a home, ideally, or maybe they buy a home now, and then we make a plan to get their credit better while they're living in the home. And so that once rates come down, they also have an improved credit score to help improve their interest rate. If you're thinking about buying, selling, refinancing, or remodeling your home, or maybe a reverse mortgage or restructuring debt, I'm happy to help you, even if it's months away. So take care, and I hope to talk with you soon. Bye-bye.